What's up, everybody? Doriso here for another episode. I'll be going over 5 things to check before buying a stock during a market crash. If you're looking to level up your money to infinity and looking to buy undervalued stocks at this time, make sure to click that like button. Let's get straight to it. Number 1. Does the CEO and management team of the company that you want to invest in have confidence of getting through this stock market crash and economic slowdown? If you've been following along these episodes, you already know I'm a part owner of Starbucks Corporation. Let me introduce you to the CEO of Starbucks, Kevin Johnson. He was recently interviewed by Jim Cramer on Mad Money.
Let's dig deeper with one of my absolute favorites. Let's go to Kevin Johnson. He's the president and CEO of Starbucks. Learn more about how he's navigating his way through this crisis. Mr. Johnson, welcome back to Mad Money.
Hey, Jim. Thanks for having me today.
Yes, I am always researching the companies I own in my stock portfolio, and listening to interviews is one important research technique I use prior to buying a stock, especially when the stock market is crashing like it is now. In this interview, Kevin Johnson provides some guidance on how the management team is dealing with the current issue going on right now. Remember, my goal is never to provide financial advice. Do not buy any stocks in my portfolio just because I personally own them. Now, let's play the clip and see if the CEO of Starbucks appears to have everything under control and to see if he portrays confidence that he will get the job done during this changing economy.
Yeah, well, this is part of what gives us great confidence in how we're navigating this globally. You know, it's been about 60 days. In fact, I think it's day 58 since we started working on this in China. And over that 58-day period, certainly we went through the valley and closed stores, and we implemented new safety protocols, including, this to-go option in those stores in China. And over the last few weeks, we began reopening those stores. And, we said 2 weeks ago to our investors we'd have 95% of those stores opened, all stores in China, 95% open by the end of March. And we're tracking ahead of that plan. So as we've looked at this, clearly it gives us great confidence that the strategy we've taken and the approach we've used in China is working. And so China is on the uptick. Now, certainly it's going to take some time for customer occasions to keep growing, but we have a model, and China is recovering, at or slightly above the model that we put in place. That gives us confidence. And we took all the learnings that we had in China, and we have now applied them into the United States and every other market around the world.
Number 2, is the company you're looking to invest in implementing new strategies to work around store shutdowns? Let's tune back into Kevin Johnson and check what Starbucks is doing at this time. He discusses the importance of cleaning as well as the to-go model for takeaway orders, which he thinks works.
And the learnings are, number 1, if we implement the increased cleaning procedures in our stores and the protocols around that, if we go to this to-go model where customers can order mobile order or through a drive-through or in the store for takeaway, they take their beverage and food out and they don't congregate in our stores. That, combined with closing some stores, for example, in the U.S., we've closed mall stores and other stores in areas where there's clusters of outbreaks. That model works. And it worked in China. We're here now roughly 60 days in. We've seen that V curve, and we're now on the mend. In fact, just yesterday, I got the word from Belinda Wong in China that we started now opening some Starbucks stores in Hubei province. And that is a big accomplishment.
On to number 3. Does the company have its employees and customers' best interest in mind during this time of uncertainty? Starbucks is approaching their 50th anniversary, and this clip explains what the CEO's priorities are at this time.
Well, thanks, Jim. We're approaching that 50th, and we kind of laid this out as the road to the 50th, and so we're within 12 months, and we're focused on our priority, which is ensuring for the health and well-being of our Starbucks partners and the customers that visit our stores. We're working hard with local health officials and government leaders to help them. And number 3, we're working hard just to show up in a positive way in the 32,000 communities where our stores are located around the world.
Here's a clip of the CEO's plan of taking care of their partners. Prior to investing in any stock, I believe it's very important to make sure the CEO always has the employee's best interest in mind. They are the ones responsible for the company's future success and growth aspirations, so we can make a good return on our investment. Starbucks is an employer of tens of thousands of workers. Kevin goes into detail about his sick policy for all employees and his goal to keep all Starbucks stores as clean as possible, and emphasizes the to-go model once more. If you're investing in a stock like a restaurant, I always want to make sure that the company is innovating during this time so that the company can continue to earn money.
Well, first of all, we have worked very, very hard to make sure we prioritize taking care of our partners. And we call everyone that works at Starbucks a partner. And in terms of taking care of our partners, the first thing we did is we have a paid sick policy that we extended. We've enhanced all of the sick time so a partner never has to choose between their health and work. They always choose their health and they stay home. That's number one. Number two, we've worked with the CDC and other local health officials to make sure the cleanliness in the stores, things are wiped down on a regular basis. At our point of sale, we have our partners wearing the rubber gloves, dealing with cash. And so we have put sort of the social distancing policies in place that we learned in China in our U.S. stores. And as we've implemented this to-go model, customers come in, they take their food and beverage, and they leave. And that model has proven to work in China, and it is working in the United States.
3 down and 2 more to go. On to number 4. Does the company that you're looking to invest in have a healthy balance sheet and cash on hand to avoid short-term solvency issues if revenues fall considerably? Will there be any dividend cuts in the future? In this clip, the CEO of Starbucks goes over his view on share buybacks, as well as his opinion of the balance sheet. Just keep in mind, any CEO running a company should always instill confidence when it comes to the numbers. Always do your own research to go along with what the CEO's outlook is. This is very important. Never just rely on what the CEO says. This is your hard-earned money you're investing, and any stock you buy, especially during a stock market crash, should be fully researched by you and you alone. That's my opinion. Also, for any dividend investors out there, make sure to review those financials to confirm the dividend stock you are investing in has enough cash to avoid any dividend cuts. In this environment, I believe certain companies will end up cutting their dividend payouts to investors. Balance sheets and income statements can be found online. Quick tip, type the company name you are researching on Google, followed by the words investor relations. Use the link that goes directly to the company's investor relations website. Let's play the clip.
Well, first of all, let me just say why we're so confident. Number one, what we did in China worked, and we're now applying that in the U.S., and we're tracking that in the U.S. That gives us confidence. Number two, we have a strong balance sheet and all the financial resources we need to navigate this situation and come out stronger as a company. That said, our board yesterday approved the quarterly dividend of 41 cents a share, and they approved our normal share buyback. Okay. It was not, what we approved yesterday was not anything above and beyond our normal share buyback that we'll do over the next 18 months. This share buyback that was approved will take us through the end of fiscal year 21. So we're being thoughtful and responsible. Look, we've got a strong balance sheet. We've got a BBB investment credit rating. I think if you look at our last earnings call, we had something like $3 billion of cash on the balance sheet. We've got another $3 billion line of credit, revolving credit. And so we've modeled every possible scenario that we think could happen, even extreme scenarios, and we're going to be just fine. We are resilient, and we've thought that through both from how we're operating in our stores. We're resilient on the balance sheet. And we're going to be just a responsible, thoughtful leader as we step by step go on this journey and do the right thing, starting with the right thing for our partners and our customers and all stakeholders, including the communities we serve, as well as our loyal shareholders.
And last but not least, on to number 5. Does the company have global exposure for multiple streams of revenue in the event one dominant location is shut down? When I invest, I personally like companies that have multiple streams of income from all around the world if possible. It's a form of diversification and not being dependent on just one location. For Starbucks, they have locations all over the world in many countries. If one location like the United States shuts stores, Starbucks has potential to continue to make money in other stores around the globe. When your company has exposure in different countries, the CEO has data and information to learn what works and what doesn't work in different areas. Data like this is so valuable when it comes to making decisions to grow a company. Let's listen in to the CEO of Starbucks and how he's forming a dialogue from stores in other countries like China, along with government and health officials around the world.
It's really dramatically increased the amount of dialogue that we are having with government, both at federal government, state level, central government, provincial level in China, as well as local health officials. And I'd say it's a very strong collaborative relationship. Look, the entire planet, every human being on this planet is united in a common cause. And so it gives us a common objective. And from that, I think we're continuing to both learn from and teach others how we can better work together. So right now, we're trying to pull together the content and information about what we learned in China. And I'm talking with many, many food and beverage leaders in the industry and sharing what we've learned with them. And that includes how to take care of people in a time of need. And so we prioritize that, and we encourage others to do as well.
So there you have it. Those are just 5 things to look for when buying a stock during a market crash. In this case, I use Starbucks as an example. You could research interviews for any company you may want to invest in. Keep in mind, I only highlighted 5 things to look for. There are a ton of other things to review prior to making an investment. As I do in every episode, here's a quick stock portfolio recap. My YouTube stock portfolio on your screen is a little over $2,500. My Apple stock position has gone up and is now my number 1 stock holding at this time. I also added a few more shares to my Fiverr stock position. Penn National Gaming has been falling considerably since no one is going to casinos at this time. Luckily, it's a long-term investment and Barstool hasn't released their sportsbook app just yet. As I mentioned at the beginning of this episode, I own 4 shares of Starbucks. During this stock market crash, I will be very selective with buying more stock. Everyone is looking to call the bottom. We may have some more room to fall, so I will be monitoring the technicals as the weeks go by. Bearish sentiment continues to go up. I do have plans to build large positions in all my stock positions over time. This may be one of the best buying opportunities in the history of the stock market. Remember, one of my main investing rules, never invest money that you need tomorrow, especially in this market environment with record levels of volatility. We may indeed have more downward momentum during this stock market crash. I'll be following it closely. As always, do your own research prior to making any investments. Read the disclaimer on your screen fully. Remember, all opinions in this episode are mine and mine alone. I'm not a financial advisor, and this video is for entertainment and informational purposes only. Let's keep building from 0 to infinity. Make sure to stay safe and healthy out there. Peace.